We've got Moody's chief economist, Mark Zandi, here. Now, of course, he famously predicted there'd be a crash if Donald Trump got elected, but he also came back and said, all right, I'm going to crunch some numbers again.
Pay attention to what I say, huh?
Exactly, very, very closely.
And by the way, I think I'm that Amex spender, or at least my wife is that Amex spender.
Oh, tell me about it. Tell me about it. But, you know, it's interesting, and I've read you about the Trump call. You're certainly not alone. But now, what's your view of where things are?
I think the economy is fine. I mean, I think the economy 6, 9, 12 months ago was on fundamentally sound ground. I think it's on fundamentally sound ground now. It'd take an awful lot to derail the train. So I think the economy's in pretty good shape.
All right, so a lot of talk that in this first quarter, it's not in great shape. I know that's an anomaly of first quarters, but it could be under 1%. If it is, will that raise concerns?
It shouldn't. That's just statistical. You know, this so-called residual seasonality stuff. So it's shaving at least a point off of Q1 GDP growth. So the reality is, we were growing 2%-ish before last year, the year before that, we're still growing 2%.
Republicans argue we could grow a lot more if we had a tax cut. And one of the reasons of the Dow is advancing, there are many, but one of the reasons is that they clear a health care hurdle and they've got a repeal and replace effort going that has more support. That clears the way as well for a tax cut. Are you in that camp that says a tax cut gives you that growth?
I think a corporate tax cut that's largely revenue neutral, at least on a dynamically scored basis, that's good policy, right? That makes our businesses more competitive. And also, our corporate tax code really penalizes multinationals, so we just kind of a messy system.
But don't a lot of small businesses pay at the prevailing individual rate?
They do.
So don't they need one that's at the individual rate?
If we could figure that one out, but that gets you into the personal income tax code.
So you would be against touching the personal rates?
Well, if you could figure it out in a way that makes that also revenue neutral. So really,
what does revenue neutral mean to you? Because I've had some on this show, including those who've espoused the supply side review, echoed by Art Lapp, saying, you know, it's okay to run deficits in the near term because you'll get revenue and then some in the longer term. So don't worry about it.
Well,
you say...
Well, there are economic benefits to cutting taxes, no doubt about it, on the corporate side and on the personal side. So there should be some benefit, as they say, dynamically scored benefit to cutting taxes.
Because you don't see the dynamic of that right away, right?
Right. It takes time.
Yeah.
But we need to be prudent. I mean, you can't go overboard on that because it's a forecast. It's a prediction, right? And, you know, I think Arthur Laffer, for example, you know, I wouldn't go all that as far as he would go, because he thinks this would generate enormous supply-side benefits. The economy would be so much larger.
I think he prefaces that by saying if the tax cut is significant.
Yeah. And at this point, that argument kind of resonated with me back when Ronald Reagan first got into office, because the marginal rates were so much higher, right? And so if you lower...
We didn't have nearly the debt or deficits, right?
Exactly. The debt deficit then was 35%.
So that kind of hamstrings you, right?
It does. So we need corporate tax, lower corporate tax. So we should take this in steps and make it manageable. Let's lower the corporate tax rate. Let's make the corporate tax system more sane. You know, there's a lot of things we can do to improve it. And let's do it in a way that is, you know, we don't have to get all the way to revenue neutrality. We can count on some economic benefits, but let's be prudent about it. We do that, that's a win for the economy.
You know, I've raised this, and we're going to be going in shortly, but with our own people here, that what is keeping the Dow so strong? You know, while off the levels, the S&P is only about 2% or so from its March 1 highs. What is doing it?
Well, I mean, ask yourself, if you sell your stocks, you, me, what are we going to do with the money? Are we going to put it into a deposit account? No, because there's zero. Are you going to put it into a long-term bond? Really? I mean, aren't you worried that interest rates are going to rise? There's no appreciation there. Are you going to put it into housing? Well, we just got creamed by housing. So, you know, it's a question of, okay, yeah, the stock market feels overvalued to me. It feels high. The PEs are high by...
But there was a day where we worried about protecting what we had. Do you think that it's getting a little too devil-may-care?
Yeah, I mean, the other thing that's going on, I think boomers, you know, the folks that are in their 50s, I think they're hanging out in the equity market to a larger degree than their previous generations did at this point in their life cycle, because many of them aren't prepared for retirement. and they can't get any return on their deposit account. They don't want to go into housing, so they're hanging out in the equity market. And that's why I think the economy is incredibly sensitive to swings in stock prices, particularly if you see a lot of red on your screen, because those boomers, they're going to respond very they'll pull back very quickly. So I do worry about the equity market. It feels highly valuable.
Real quickly, the Federal Reserve is out of the stimulus business. Reportedly, have a balance sheet, $4 trillion plus, I guess. They're going to unwind, not clear as to when they start unwinding. So the only game in town would be something fiscal, right, to goose things.
Well, it's not about goosing anymore. We're at full employment, 4.5%. It's now about
But we're at meager growth. We have to just get used to that?
No, it's about getting long-term, sustained economic growth, and that means corporate tax reform. That means immigration reform, right? We shouldn't be...
Well, what's an acceptable growth level for you?
Well, anything better than 2 is acceptable. I'll take it. Even the corporate tax reform under the best circumstances isn't going to take you to 3, and certainly not 4. But it'll take you to 2.2, 2.3.
It's substantial.
But that's substantial, right? Over a 10, 20, 30-year period, that means real
What about
wealth.
the debt? It's one thing to try to get the goal to eradicate it, but the markets might be happy if they just see it stop growing.
Yeah, and that's why it'd be nice if if we do corporate tax reform, we got to be prudent about it. We have to do this in a way that it doesn't add to deficits and deficit debts, even on paper.
But that argues for tinkering with the tax code rather than doing something revolutionary.
Yeah, it argues that the top marginal rate for a business is 35. There's no way to take it to 15, right? How are you going to?
How about 20?
20's tough, unless you have a border of adjustment tax, but if you don't have that, it's tough.
Okay.
28, that's doable, manageable. We can accomplish that. And then let's see how that works out, 5, 10 years down the road.
Donald Trump, how's he doing?
Donald Trump, he's not doing much, right? So it goes back to the derailing of the train. I mean, here's what I worry. We focus on corporate tax reform, great. Focus on infrastructure, great. It's the anti-globalization stuff that makes me really nervous, particularly immigration. Because if you really want to go from 2% to 3 to 4 on a sustained basis, we need more immigrants, not less. We're at full employment, right? Mm-hmm. So if we want to get more growth, we need to, and it's, skilled workers. And very simple stuff, like all these kids that come to our universities, we train them and then we send them back. Why are we doing that? Why don't we give them a visa to stay and work here and create jobs here? I hire these kids, and they're in 2 to 3 years, they're going to say that Zandi's an idiot and go start their own business. And why do we?
That's the president. He just tweeted, Zandi's loser.
That sounds right.
Yeah. Mark Zandi, thank you very much. He's the Moody's chief economist now.